Good morning, ladies and gentlemen. This is Clueless 8, and this is the pre-market report for October 28th, 2015. We are ending we are nearing the end, 48 hours from now, the end of October. More importantly, it's the end of the fiscal year. I repeat, end of the fiscal year for the multi-trillion-dollar mutual fund industry. That statement itself carries a lot of weight. People who have worked in the financial industry know very well that the mutual fund 800-pound gorilla are the ones that really dominate the landscape when it comes to money management. So when the fund managers are adjusting their books, selectively doing window dressing, which is a simple form of saying that they are putting in stocks into their portfolios to showcase the big high-flying names and the winners for for the quarter, for the year, and also very importantly shedding the ones that haven't done well for the year, for the fiscal year, for the mutual funds, and done well for the quarter. You are going to have some rather random, volatile movements in the market. That is exactly what we're seeing. The stock market, in a funny way, is actually behaving like the stock market. Individual stocks are being punished for delivering, and certain stocks are basically being taken higher, way above, based on their growth prospects and based on what the general consensus is out there by the market and the people who basically control the market. Keep in mind that trying to be a fundamental analyst, I've always said, is a futile game. After many years in the financial, having worked in the financial complex, I'll tell you, when it comes to it, it's fundamentals eventually do catch up, but they are never the law of the land when you're looking at the way prices are. I put up a terrific article the other day talking about the same thing, about the fact that technicals really dominate the market, and on a short-term basis specifically, 90% of the trading and the market landscape is dominated by algorithmic high-frequency trading programs that move within certain technical levels, and therein lies my emphasis on understanding the background of the S&P 500, the Russell 2000, the NASDAQ 100, and indices of that sort, the biotech index, because once you understand the background of where we are, the landscape that we are driving on, then you'll be better able to manage your trades, i.e. manage your car as they drive along this terrain. Keeping that in mind, we are in an environment where sentiment is quite subdued, regardless of strong movements in the market. I will tell you, and I'm not the first one, that has been validated by reports from Credit Suisse, JP Morgan, and many other firms, that the individual investor and the overall sentiment by institutional investors is rather bearish. In the face of that, we do get quick reset type of sell-offs. And what you see in the background is a picture of the S&P 500, which I'm going to go through very quickly. And many of you who have worked with me closely on the group coaching sessions, individual coaching sessions, listen to my video cast. And I am generous enough to go ahead and put some of these coaching sessions for public viewing. One that is out there has already had quite a few views. And it is important for people to do that because I want to give them a flavor of what I cover when I'm working with my individual members. For that minute amount of money that I charge for my time, I'm spending more than an hour and a half, in some cases 2 hours, explaining things that I observe and which has benefited me tremendously in my portfolios. So it's highly emphasized and recommended and encouraged that every single member join the group coaching sessions, not necessarily the single ones, but the group coaching sessions, to really maximize the potential of the Clueless 8 trading charts and the methodology that goes behind it. Saying all that, as we come into the end of October, we are going to hit a turbulent patch. Not that we don't hit turbulent patches, during you can see all those, these are all 100, 200 point type of sell-offs. Keep in mind that in November, it looks like we have a budget deal which should keep the government open throughout November. So November is really shaping out to be a pretty powerful month, to be honest with you, if things go the way they are. Saying all that, we have the Fed meeting today. There will be volatility around 2 p.m. In my opinion, the bias is still to the upside to levels that I'll show right now and I've shown before. And of course you have to manage your trades accordingly. I do not recommend, and again, I'm not in the recommendation business to start with, but just as a guideline for anyone to have any outsized positions, playing individual earnings reports. Some of them have been great winners, some of them have come down. But again, we have had some phenomenal winners on that side, both on the short and long side. So I'll stick to providing ER plays, as I call it, earnings report plays, for people to buy a few common, maybe a few calls. And again, my rule of the thumb is to buy deep in the money if I have a strong conviction on that stock, because the reality is, just like Apple and many other stocks, they'll keep it there on the flat line. And if you're buying way out of the money calls, you're just going to get, you're just going to get decimated. Of course, you're going to lose a lot less money if you buy deep in the money calls, which cost quite a bit. But again, that's for you to see. So let's take a quick look at the S&P 500. You can see my cursor moving over it. The dragon bullish formation that I talked about I talked about many weeks ago is really coming to fruition at this point. So here we are, and this is the W formation, also known as a dragon bullish. And in between that, as you can clearly see here, it's not been a one-way straight line. We have had powerful moves, very powerful moves in the form of these type of candles, and then we have consolidation flags. Then we go up, and then we have these type of unprecedented, very quick 200-point sell-offs. This is a Walmart sell-off. Then we go up. Then we have a quick sell-off just the other day, and then we have a huge move up. Now we had a quick sell-off yesterday, and now this is where we are. At this point, I believe that we head towards the upper end of the rising wedge. That's that blue line here. Okay, this one. And again, I highly recommend that people listen to my videocast and work with me on the weekends on these chart patterns, which really have, which have been tremendous guides for me. And these are not just for fun. I mean, this is for making money. So, a few dollars spent towards, and a lot of my time spent, really should help you out tremendously in keeping your money and making a lot more. So looking at the upper acceleration band here, this green line, we are looking at somewhere around 2080 or 2085. And then looking at this line here, this is the Bollinger Band, we're looking at about 2080. So somewhere between 2080 to 2085, in my opinion, we stop in the tracks. Now if we do an overshoot, then it's going to be another one of these patterns. This is, like I said, these are bullish intermediate patterns. That's why I remain hesitant to do any large scale type of or moderate scale type of swing trades overnight. So intraday, that's fine. Didn't work out yesterday with UVXY. I lost a little chunk of money because trying to buy the UVXY. Went positive a couple of times, but then got stopped out. But that's just the way it is in the face of a powerful market that has reset, as you can see here. Not to deviate from the point, but if you notice these lines here, these are in oversold territory. Until they get overbought, there is no reason to have a dogmatic short on. So once you get overbought, you can put your shorts out in the form of SPX puts, in the form of the UVXY, two of the best vehicles that I've found, and of course there are many more. And then you can wait for a reset. Resets can take anywhere from a few hours to a day or two. Just remember that, okay? So there is no exact time frame when it's going to reset. In the meantime, this bullish formation is in play, or it is bouncing off all the lines that I've drawn on these charts. Remember, all these lines are not auto-generated. They are Clueless 8 trading lines, and the market tends to fall within those parameters. So at this point, a move up like this would certainly complete this rising wedge. And after that, I believe, we have many lines, we have different levels we can fall in. We can fall to 2060, which is this particular line here. And that is also another rising wedge. Look at that, okay? I don't want to draw too much over it. Here it is. And then, of course, a break below that, then we would come down and test one of the downtrend lines that we broke out of the other day. Okay, so let me clear this thing out so it's not, it's easier. So let me zone into what's going on right now. All right, to minimize this, we are certainly oversold, so looks like we have some strong moves coming up. Keep it also in mind, we have the new moon, I believe. I don't want to get into the lunar stuff, but believe me, I've covered that before and it works. I believe the new moon, as far as I remember walking my dogs on the waterfront last night, it looked like a new moon's was yesterday, right? So let's see what happens. So, I mean full moon, what am I saying, new moon? So saying all that, It's pretty easy to see. I'm moving the arrow. We had a double top here. You can see that. You have a double top here, right there. I'm drawing this line. Hold on. Okay, so you had a double top here. We went and tested it, failed, came down. So at this point, a logical extension would be that we move up back into this zone here, which coincides with the acceleration band, Bollinger Band, and the double top again. Keep in mind, if we break that double top, we're going to have a very sharp move of another 100, 200, 300 points up towards the 2100 level. We do not know it's going to happen, but we never know what's going to happen, right? So I'm just showing you the roadmap. So it could be like this, then a pullback, and then a move up, or it could be like this. In my opinion, that's what it's going to be. And then we come and test the uptrend line here, or the bottom of the rising wedge. We fail, so that comes to around 2065. If we fail, then we're going to come down, and at that point the 50 and the 34 lines, which are moving nicely higher, you can see that, all right, which is nicely higher. If we break that all of a sudden, and if we break that sharply, I mean, you're going to start to see a trend break. So short-term trend break. Also keep in mind, keep an eye on the 5-day moving average, which is the yellow line on this particular chart, which is on freestockcharts.com, Warden, and the 5-day line is 1 second here. So I'm going to make this bigger. Okay, not sure where the 5-day line disappeared. That's interesting. Let me take the VWAP out. Bear with me 1 second. I'm just putting it in again. The 5-day moving average, which is the traders. Okay, bingo. It's back. Very important. So here's the 5-day line, which I call the sort of the traders guideline and or roadmap for a short-term basis. 5 days is in 5 days in a trading week. You know, a lot of people use 10 days. I use the 10, I use the 5, 34, and the 50. So the 34 and the 50, imagine this to be like highways that you're on. The 5 days, basically, you know, the lane that you're in. These are the highways. Anytime you deviate way too much away from the highway, you have a reversion to the mean. That's exactly what you saw right here. Okay, right? And now you're back here. You tested the lower Bollinger. You went close to the orange line, the 34-day moving average. The 50 is right here. They're trending up nice, so that's all good. And the 5-day right now, this was the close yesterday. This is where the UVXY basically collapsed at the end of the day. So at this point, logical move would be that we move up towards the upper end around 2077 or so. So you're talking about another, 80 to 100 points. Again, Fed day today, you're going to see some volatility. If we break, I repeat, if we break the 50 on any convincing way, that's around below 2049. Okay, below 2049 or 2050, please do not be a hero. At that point, the market will fall rather quickly and then test the 100-day moving average at around the 2034, and it's going to feel pretty ugly if you're not prepared right. So I'm going to keep my positions close to the vest. I'm going to act very quickly on the SPX calls and puts today, given I'm not going to react like a monkey on a hot tin roof just because the market's down a little bit. I'm going to monitor the internals, and I'm going to put all that stuff out there for everyone to benefit from. Thank you for listening. For all the new members, there's a lot of stuff in this market, guys, ladies and gentlemen. And I'll tell you one thing. Overall, the market trend, as you can clearly see, is higher. And at one point, we are getting to 2100, but it's going to be a zigzag road up there, just the way it is. So anyone who comes and tells me this is the start of another bear market, yes, there will be a bear market. But if you're telling me this is the onset of the bear market, then you're obviously smoking something you don't want to smoke. Okay, so just letting you guys know. In the meantime, expect volatility. Be selective on the trades. Be quick. Enjoy the profits. Don't let it run too much. Because the volatility algos are always watching to snatch it away and rob us of our hard-earned wealth. Thank you for listening. This is Clueless Abe.